Imagine walking through a city where demand for homes is sky high, but new projects are few and far between. Buyers are frustrated, developers are cautious, and prices remain stubbornly elevated despite market slowdowns. This is the reality facing Canada's housing sector in 2025, a market defined less by what's being built and more by what isn't. Supply constraints, driven by rising construction costs, regulatory hurdles, and limited land availability, are colliding with selective new development strategies. Instead of building everywhere, developers are focusing only on projects with the strongest fundamentals. The result? A market that is cooling on the surface, but still grappling with long-term shortages. The supply shortage problem. Canada's housing supply challenges didn't appear overnight. For years, demand has outpaced new construction, driven by immigration, urbanization, and generational turnover. Even as the market cools in 2025, this structural imbalance persists. Population growth Canada continues to welcome record levels of immigration, with newcomers driving demand for both rental and ownership housing. This inflow far outpaces the number of homes being built. Construction costs. Inflation in materials, labor shortages, and supply chain disruptions have made building new housing more expensive than ever. Developers are cautious, launching fewer projects to avoid financial risk. Zoning and regulation. Complex approval processes, restrictive zoning laws, and community opposition often delay or reduce the number of units being built. High-rise projects, in particular, face significant pushback. Financing challenges. With interest rates elevated, financing large projects has become more expensive. Developers must carefully weigh whether a project will attract enough buyers or tenants to justify the risk. Selective development. Quality over quantity. Rather than flooding the market with new builds, developers are adopting a more selective approach. Projects that move forward share several common traits. Prime locations. Sites near transit hubs, employment centers, and desirable neighborhoods still attract demand. Developers know these properties will sell even in tougher markets. Amenity-rich. Offerings. Buyers are choosier than ever. Projects with wellness amenities, green spaces, co-working areas, and energy-efficient features stand out. Climate resilience. With climate risks like flooding and wildfires in focus, projects that incorporate resilience measures are viewed more favorably by both buyers and investors. Smaller scale builds. Instead of massive condo towers, some developers are shifting to mid-rise or modular housing projects that can be built faster and more cost-effectively. This selective strategy reduces risk, but also contributes to ongoing supply shortages. Fewer projects mean fewer homes entering the pipeline, even as demand continues to climb. The impact on buyers. For buyers, selective development has mixed consequences. Limited choice. With fewer projects being launched, buyers face less variety in the market. Competition for well-located and well-designed homes remains high. Premium pricing. Developers often charge higher prices for selective projects, reflecting quality, sustainability, and location advantages. Tougher entry for first-time buyers. Affordable housing is hit hardest by supply constraints. Without a strong pipeline of lower-cost options, many first-time buyers remain sidelined. The impact on sellers. Sellers, particularly those in desirable neighborhoods, benefit from ongoing supply shortages. Even as national prices dip modestly, well-located properties remain in demand. Homes with features that align with modern preferences, energy efficiency, flexible layouts, or proximity to transit attract premium offers. However, sellers in oversupplied segments, such as downtown condos in major cities, face stiffer competition. Selective new development often bypasses these markets, signaling that even developers see better opportunities elsewhere. The investor and developer perspective. From the perspective of investors and developers, today's market requires sharper focus than ever. Institutional investment. Funds are targeting purpose-built rentals, logistics hubs, and life sciences facilities, leaving speculative condo towers behind. Long-term value. Investors are prioritizing assets with stable cash flow and resilience to economic shifts. This includes multifamily housing in growing mid-sized cities. Innovation in construction. Modular and prefab construction are gaining traction as ways to cut costs and deliver housing more quickly. These methods could help ease supply constraints if adopted more widely. Regional dynamics: Toronto and Vancouver. These cities continue to face severe supply shortages, but developers are highly selective about which projects to pursue. Land costs and zoning battles make large-scale housing difficult. Calgary and Edmonton. With relatively more available land and affordability, selective new development is shifting toward detached and low-rise homes. These markets are attracting both buyers and investors priced out of larger cities. Montreal. Mid-rise projects and rental-focused developments dominate, balancing supply needs with cost considerations. Atlantic Canada. Smaller markets are seeing growth in selective new builds, particularly aimed at out-of-province buyers seeking lifestyle and affordability. Policy challenges. Supply constraints and selective development raise pressing questions for policymakers. How can Canada build enough housing to meet demand without sacrificing quality or affordability? Streamlining approvals. Faster and simpler zoning approvals could help accelerate housing delivery. Encouraging mid-rise and infill. Supporting medium-density housing can strike a balance between affordability and urban sustainability. Incentives for affordable housing. Governments may need to step in with subsidies, tax breaks, or financing programs to encourage development of affordable units. Infrastructure investments. Transit and utility upgrades are essential to make selective developments viable and sustainable. Long-term outlook. Looking ahead, the balance between supply constraints and selective new development will shape Canada's housing market for years to come. Without significant policy reforms or innovative building approaches, shortages are likely to persist, keeping affordability challenges alive. Selective development, while understandable from a business perspective, risks exacerbating inequality in housing access. Families with means will continue to secure premium homes, while others may struggle to find suitable options. The silver lining lies in innovation. Prefab construction, green building technologies, and smart urban planning have the potential to expand supply without sacrificing sustainability. If adopted at scale, these solutions could reshape the market in positive ways. Canada's housing market is clearly at a crossroads. Supply constraints and selective development are shaping the homes we live in, the prices we pay, and the opportunities available to future generations. But here's the big question. Should developers keep focusing on fewer, higher quality projects, or is it time to push for more housing? Fast, no matter the challenges? What do you think? Would you rather live in a premium, selectively built project with higher costs, or see more housing built quickly to ease shortages, even if quality varies? Share your thoughts in the comments. I'd love to hear your take on how Canada should tackle its housing supply problem.